We're ready to go, and please take it away, Mr. Owais Zaidi. Thank you all for your patience.
Thank you, Faris. Welcome everybody to this roundtable on raising finance for the regulated sector, that is FinTech. We couldn't have possibly asked for a better roundtable. We get to have the State Bank, the Stock Exchange, SECP, and two reps of amazing VCs on this amazing roundtable. I will ask one by one all my roundtable members to go about and introduce themselves. And after that, I will just do a brief introduction for today's session, and then everybody can start contributing. So Athar sahab, why don't you start? Athar sahab, can you start with your introduction, please?
Okay, thank you very much. My name is Athar. I'm a Additional Director here at State Bank of Pakistan, representing. I'm actually in Exchange Policy Department, which look after all the policies and regulations related to investments, foreign currency loans, and all stuff related to raising financing from abroad. Thank you.
Nadir Rahman sir.
The Nadir Rahman, I'm the Chief Operating Officer of the Pakistan Stock Exchange, which is where we hope many of the companies that get funded through this conference will ultimately end up.
Okay, Mubariz.
Hello everyone, my name is Mubariz Siddiqui. I am a lawyer by profession. I am currently working as a General Counsel of Sarmayacar, which is a venture capital fund. I've been working in this space for some time now, particularly working with startups and investors.
Ms. Najia.
Assalamu alaikum everyone, and hello. This is Najia, and I am working at Securities and Exchange Commission of Pakistan, presently heading the Primary Markets Approval and Capital Market Development Department. Again, that relates to the primary issuances, the public offerings, the debt issuances that we can see the activity through Pakistan Stock Exchange. Please.
Okay. Khurram.
Good afternoon, everyone. My name is Khurram Zafar. Thanks for having me here. It's a pleasure being here. I'm the founder of 47 Ventures Investments. It's a venture capital fund that has been investing exclusively in Pakistan for the past 3 to 4 years. We made 6 investments in the country so far. I'm also a director of Karandas Pakistan, which is a $250 million SPV, make investments. A large part of that capital goes into financial inclusion space. And also an investment committee member of Inciter, which is a Singapore-based impact investment fund.
Okay, thank you, Khurram. So before we get started and everybody starts contributing, I wanted to just set some ground, base information. So regulated in the FinTech is mostly a regulated sector in Pakistan. And it has yet to attract the kind of investments in big stories that a lot of other sectors like ride sharing and e-commerce has all. So there have been challenges both at the regulatory end at some point and bringing in foreign investment for this sector and the maturity overall of the sector participants. So we would like to open the floor and look at what were some of the roadblocks of bringing investment in, both from the local VCs as well as international funds. What's the maturity is looking like for the sector, how different regulators are playing their role, and what do we see as a future? So let's feel free to get started and share your personal and organizational perspective on all these points.
Wes, if you could allow me first.
Sure, please.
Thank you. For raising funds from offshore, either in the form of equity or in the form of loans from abroad, I would just like to, for the sake of for the benefit of the broader audience, I would like to just go through our current foreign exchange regime so that everybody become aware of that, and if anybody is interested for bringing investment into Pakistan or for making investment into Pakistan, so they should be aware of what our current foreign exchange regulations are. So from foreign direct investment perspective, our foreign exchange regime is quite liberal, and anybody can invest in Pakistan. There are no restrictions, there are no limits on making investments in Pakistan. There are certainly few segments where the investments cannot be. These are kind of some sensitive natures like explorations and nominations where the investments are not allowed. Otherwise, every segments of the economy is open for foreign investors. And from incorporating a company in Pakistan, there are no minimum limits or maximum limits for making investment in Pakistan. The companies who attract investments in Pakistan, what they have to do just to facilitate their non-resident investors is to they have to designate an authorized dealer in Pakistan. Authorized dealers are rather banks which are operating in Pakistan. They have to designate that banks for the purpose of making that dividend and disinvestment proceeds kind of things. Surely that's a subsequent thing. But once these investments are in Pakistan, they are open. There can be a sale abroad. They can be sold within Pakistan. They can be dividend can be repatriated without any limitations, and disinvestment proceeds can also be repatriated without any limitations. So recently there was a hindrance from which certain investors have pointed out that there are some approval requirements at the time of remitting disinvestment proceeds outside Pakistan. So recently we have changed that regulation, and now that process is also completely transparent and completely delegated to the authorized dealer. So without any regulatory approval, that remittance can be remitted out of Pakistan without any further hasslement. For raising loan from abroad, there are certain categories have been defined under which these loans can be raised from abroad. Eligible lenders and borrowers has been defined, and certain maximum threshold has also been defined under which these loans can be raised from abroad. And apparently there is no involvement of regulatory is there in this process also. Previously, it was a process of registration with the central bank for these loans, but this requirement has also been done away. Now the banks can register these loans at their own, and subsequently they can remit make their repayments like interest payments and the maturity payments without any regulatory approval, unless these loans are within these prescribed limits which have been given in the formation manual of the State Bank. So one challenge which we are being pointed out by the startups and fintechs that one of the most commonly used mode of investment raised for raising capital in early startups that's in the form of convertible notes. That something is not readily available in our regulations. There are the provisions are there, and what we are working on it, and very soon we will be able to allow this product as well as permissible products to facilitate our startups, fintechs to raise loans in the form of convertible debt as well. So these are the main features of our foreign exchange regime. So if there is any specific question or is there any specific queries, I'm here to answer that as well. Thank you very much.
Sure. Khurram, why don't you take it from there?
Yeah, thank you, Owais. Athar, let me just start by acknowledging that over the past couple of years, both the regulators that we generally deal with, I won't discuss FPR because we don't have a representative there, but at least SECP and State Bank of Pakistan, they've been shown a lot of openness towards listening to the industry and responding to some of the challenges that the industry was facing, both for investors as well as entrepreneurs. But we're making very quick progress in the right direction, but there's still lots that needs to be done, and I'm hoping that we can continue at the same pace. So just to sort of a question I had from what you stated regarding making loan investments into Pakistan, why do we have a restriction on who can make that loan? For example, it's very common for individuals, for example, high net worth individuals to be able to make investments in startups. Why bar them, and why just leave that as a privilege for institutional investors or DFIs to be able to make loan investments into the country?
Yes, so we have rightly pointed out that there is a bar right now, and but we also understand that for this new space for fintech startups, mostly it will be angel investors who will be investing in these segments. So as I have pointed out, that we are working on with the industry to have some products which are specifically designed, which will be specifically designed for this segment of the economy, and definitely that will allow the individuals as well to make investment either in the loan or subsequently which will be convertible in equity as well. So that's something which we understand that it's challenge for this industry, and we will try to overcome it as well.
So are you planning on, because convertible note is just a subset of a loan, right? So if you, yes, in order to enable convertible loans for individuals, that means you'll have to enable loans from individuals also.
Yes,
so is that on the cards?
Yes, it's on the card, and we are working on it. We are in consultation process with the industry as well, and we will be rolling out a draft as well for taking consultation for the proper consultation from the industry. And under the idea behind that is that we should allow as a cost equity product. So under as you must be knowing that in equity there is no restriction from on individuals whether they can invest or not, they can invest. So being considering that as a cost equity instrument, so that individuals will definitely be eligible to invest under this product. So that will be introduced as a separate product, as an allowed product, which will, though approval requirement will be, hopefully will be we will try to design it in such a way that minimum interruptions from the regulators is involved in this.
Okay, fantastic. So when you say quasi-equity instrument, are you planning on allowing these notes to be structured in a way that there's a forced conversion into equity? Or will you allow it to be an option, which means it could just remain as a loan throughout the term, right?
You know, by default, this can be repaid, so that we have to open that option as well. So either it will be repaid or after a certain period, or there should not be any forced conversion into equity. Otherwise, it will become again a caveat for the industry. So we will try to design it in such a way that it will facilitate most of our stakeholders.
Okay, music to our ears. Thank you.
So, Madam Najia wanted to add something?
Yes, thank you, everyone. Again, with the continued efforts that have been highlighted by State Bank, being part of the government functionary, we on the same page as being an SECP are trying to facilitate. And from that perspective, I would just initially would like, before entering into the conversation on the capital formation or raising finance, I would just like to get hold of certain numbers, and those numbers are like the total listed companies as of now on Pakistan Stock Exchange are 531. So if we look around the number of sub-account holders, like the number of investors who can actually invest in the stock market, it's around 250,000, 250K. So, and further going down, if we see that 60% out of the total population of the sub-account holders belong to Karachi. We actually have to understand what are the challenges that Pakistan actually is facing. We need to understand that beyond Karachi, there needs a lot of effort need to be done to actually get the investors engaged in the capital market as well in Pakistan Stock Exchange. So considering the challenges, again, biggest challenges we all know is that majorly we are an informal economy, hesitant to get documented, hesitant. If I talk about the small companies, they are hesitant to even enter into liquidating their own shareholding structure. So when they intend to come to the stock market, that is one of the biggest hesitant there. Again, low investor penetration, even penetration in insurance sector is very low. So what the regulator's role is to create an enabling environment, both for the demand side and the supply side, so that the savings can be channelized. I've just mentioned that our role is to actually be supportive for capital market formation, through the Pakistan Stock Exchange and other capital market modes that are available. So considering that, SECP has taken a lot of initiatives in the recent past that includes the definition of startups, creating some enabling framework for the startups. I understand that those were done through an ordinance, and the ordinance has repealed, but SECP is in the phase of doing it through a bill and is trying to get it done very soon. Then we have done certain improvements in the amendments with regard to the venture funds, venture capital, private funds. Then SECP entered into the area of testing the innovative solutions through the Sandbox approach. GEM market, growth enterprise market, has been introduced. Most probably Nadir will shed more light on that. There are certain listing requirements that actually SECP has invoked with regard to the main board listings so as to create ease in doing business. These are the broader areas where we have actually entered into. If we talk specifically about the regulatory sandbox, the purpose was to provide a platform where the innovative solutions for which there is no enabling regulatory framework available that can actually be addressed. So the approved business models that we have actually approved include the digital insurance, the digital platform for the mutual funds, in the space of robo-advisory, in the space of the P2P lending, and crowdfunding included. So these are the broader areas where SECP has actually entered into the space, and again is always ready to facilitate the innovation, the innovative solutions, the startups, because startups in general account for around 80% of the economy's GDP. So that's what we understand, and we want to facilitate them.
Mubariz, you want to add something to that?
Yeah, of course. I would like to start by echoing Khurram's earlier observations around SECP and SECP doing excellent work at I would say record-breaking speed. I've been practicing as a lawyer for 12 years in Pakistan now, and with many regulators in the past as well. I would say some of my faith in dealing with regulators has been restored as well. From a policy perspective, I see both SECP and SPP moving towards the right direction, which is to allow more and more small businesses and investors from abroad to invest in those. From beyond policy, though, I have some issues regarding the procedure, especially from the SECP side. I mean, foreign investors, when investing in Pakistan, still need to get documents attested by Pakistan. Absolutely makes no sense, because the officer sitting there is in no position or better position to actually verify the authenticity of documents. It's pretty much stamping. And there are smaller issues around how some pages are not stamped, inadvertently left out, and that was a big thing. So there are little wrinkles that we still need to iron out, but on the whole, just taken by State Bank, but quite encouraging. They can write significant foreign investors who are interested in the Pakistani market. The SPP Sandbox, I would say, is one of the more biggest innovations undertaken by a regulator in Pakistan, which is now allowing licenses which did not exist before, as Ms. Najia rightly pointed out, from robo-advisory to P2P lending. These licenses did not exist before, but I would also like to acknowledge that it is not easy regulating the space. And the panel that I was before, what we discussed was that all it will take is 2 or 3 big FinTech figures for this space to be so over-regulated that it's not possible. So what we also need to be mindful of is that the regulator's job is not easy, but it's quite important in this space. And the FinTechs need to be, I mean, it is the industry and around the world. If public funds or public money is to be handled by certain companies, they have to be regulated. There's no two ways about it. But what's important is that while the policy is enabling, the procedure also makes it the process streamlined, and we have to make sure that as investment coming through, we could do away with these requirements around documents needing to be stamped by or not using electronic. We have been able to allow all of these things. We need to each regulator needs to actually think about how the process to be simplified.
Okay. So I think some very valid points, and one very interesting point is that all the fintechs want all the powers that a bank has, but they don't want to be regulated like a bank. So I think the fintechs need to grow up, and they need to realize they can only be agile and nimble by being fintechs. the moment they start being a new bank, a digital bank, and all these things, they just need to realize the amount of oversight and regulation that will come with it, because they're dealing with public money, and it's the regulator's job to safeguard the common investor and the depositor. So that's a little bit of a wake-up call for the fintechs as well, that they need to align themselves. So now moving on towards Nadir, I would really like to hear what Stock Exchange has been doing and what have you been doing to make it easy to raise finances, and maybe elaborate a little bit more about the GEM especially.
Thank you, Owais. I'll just jump straight in. There are two main boards. There are two boards on which you can list on the Pakistan Stock Exchange. One is the main board, and which is kind of the big company, the big boys area. We had an SME board for a number of years, which was not very successful. It has been rebranded as Growth Enterprise. We are actively pushing technology companies to take a look and see whether it makes sense for them. You see, it has to make sense. It can't be a board hai to log aayenge list karne ke liye. It has to be something that works for them. In terms of regulation, the SECP has kind of kept it minimal for companies, realizing that the companies are small. Corporate governance in such companies is limited. They are entrepreneurs and so on. So they grow into that role if they would pursue that option. Having said all that, I think the investor side here is focused on flow, profits, payouts. We have not yet seen that mentality amongst the investor base or the investor that is active on the Pakistan Stock Exchange, that they focus a lot on value. There is, of course, that focus, but it's on listed companies. It's an oil companies producing oil, there's revenue, certain regulatory risks, so on and so forth. But end of the day, the profit hoega, dividend milega. When Uber went public, there was a lot of discussion on the same as a loss-making company for X number of years, achieving a value that it did. And one of Pakistan's, I would say, biggest businessmen with maybe 7 or 8 listed companies on the exchange was talking to me, and he said, look at this here. The company is not even going to be able to pay its shareholders, and look at the value it's got. Look at our companies, what value we have given to our shareholders, and look at our combined valuation. It doesn't even, all our companies don't even equal, 1/50th of what Uber achieved on its IPO. So that thought process also, before we were talking about Zoom. I mean, Zoom, I'm certain, will be a cash flow negative company. Yet it's worth $110 billion listed in New York or Nasdaq or whatever it might be. Our market is relatively smaller, relatively not as, I won't use the word sophisticated, but I would use the word return driven. So what the two companies that I mentioned earlier we're talking to are both software developers, both have contracts, both have maintenance contracts, long-term contracts, some international work, and they're quite happy doing what they're doing. So I said, look, don't you have ambition to go to that next stage? They said, maybe. We are quite happy making our 30 million rupees a year, which we are making today, and we'll carry on doing this. Once we list, we come under scrutiny, we'll have to spend money to, for our infrastructure, our auditor has to be better, and this, that, and the other. So there are two sides to the story. So if one side, the exchange is a regulated platform. It's not venture capital that I can go in and I can say, okay, here's my 100 rupees, please give me 5% of your company. Either you have to follow certain rules and regulations. They may be minimized for the growth market, but you must follow them. So what we've also seen, the Pakistan Software Export Board has been in discussion with us for about a month. They say we have about 15 companies which are looking for money. And we said, fine, we'll facilitate, we'll help, we'll find an investment bank or investment banks to help them to prepare for listing and raising some money through the GEM board. But we haven't moved much forward yet because the companies are not in that shape to come forward yet. So I think when we talk about the whole stage, especially on the technology side, the VCs and the so on and so forth also have that added responsibility of preparing that company for that next leap forward. It's fine to wear jeans and write to the software code, But when you come into the world of business, there are only maybe 1 in a million or 1 in 100,000 that can actually make that transition. The rest will continue to wear jeans, t-shirts, and write code and remain where they are till they get acquired by somebody bigger who's actually made the transition. So Pakistan में ये thought process भी अभी आना होएगा. When you talk about the tech sector on the stock exchange, you have a few companies. There was a recent listing, TPL Tracker, which for all intents and purposes is a tech company. It may have hard assets in some cases and, vehicle monitoring and so on and so forth, but it's a tech company. Difficult reception, people not understanding. This company, this is a loss-making company. Yes, but see its plans. Give it its due value, which is probably double of what it's being offered to you at. You have Systems Limited, software developer, NetSol, software developer, and a couple of other examples. So the space hasn't, and they are all profit companies which pay dividends. So that space hasn't yet been created, and we are trying quite hard. We've been talking to a number of people, number of stockbrokers as to, what would they think about sponsoring companies like this and bringing them on. And a lot of them are also afraid that, we'll bring it on and then it won't make a profit after 2 years, then what will happen? So there's a lot of, I'd say, groundwork still to cover. But once one happens, then I think we'll see the gates open. So we're just trying to get that one, the first one to come in. And then you will see receptive people, you will see receptive investors. Earlier we were talking also about FinTech not attracting money from Pakistan itself or Pakistani companies. And I don't know, I think there are a couple of examples where local entrepreneurs have invested, but let's see how that goes. So anyway, that's the thing. I mean, we are here, we are open, we are receptive, and we are very willing to discuss regulation both at the PSX level and with SECP, should there be companies that are interested in pursuing listing on the stock exchange.
So I'm going to throw a question that I think was going to draw State Bank, SECP, investors, everybody in. So now you have GEM, and historically this hasn't really worked out in Pakistan, right? So you may see some success right now, but so Athar sitting in State Bank has a challenge regulating a lot of investment that's coming in. But is it possible, and I want everybody's perspective on this, that to use GEM as that vehicle that you can route your safe notes, your convertible notes, your equity, local, foreign, all this to be routed through that. So in a way, there is certain safeguards. It builds more trust for foreign investors. At the same time, it's easier for the regulators to keep an eye on everything. And then as they build a track record with you, because there will be certain compliance requirements, right? I've just started serving on board of a listed company. We went public this year. So I understand the amount of overhead that brings, but it also brings immense amount of discipline inside the organization. Yes. And I think for fintechs that's dealing in money, that's critical. So what's the possibility from a regulatory and management perspective from State Bank, SECP investor side of using GEM as a central vehicle for routing all these interesting instruments and you becoming the clearinghouse for routing all these local and foreign investments? Why don't you start, then everybody can chip in?
Good question. I think the point really is that GEM is for a listing purpose, which means it is open to investors, public investors. In the GEM case, there is a criteria for the kind of individual investor that can come in, given that you require a slightly more sophisticated investor who understands that this is not a cement factory or a textile factory, and the risks correspondingly are higher. So yes, in the sense, it wouldn't be a clearinghouse for also if company A in the fintech sector is attracting investment and requires more visibility on its operations and so on and so forth, then certainly it can move into towards the GEM board and then route its convertible bond or whatever it might be as an instrument through there. To the, it can be marketed to the eligible investors, or it can be somebody who's already structured the deal and says, I will invest provided you go and list and everybody gets more visibility on your operations. So in theory, part of your question is yes, and part would be no. They're not as a general kind of thing.
Okay. So, ma'am, you want to contribute?
Yes. Let me build upon what Nadir has just said. Before specifically answering your query, we need to understand the whole ecosystem for starting a business. We have to understand that how any smaller, or for that matter, simple individual with an idea will enter into the business space. What will he need? He will start initially with his own savings or the savings of his family, and then will go to the bank, will make it bankable, will make the project bankable, even if it's a fintech association. It doesn't matter whether it's a fintech, in the fintech space, the businesses, or it is a traditional business structure. But the mechanics will remain the same. So he will start with initially with his own savings, selling his idea, making it bankable to the other investors as well. So after utilizing that space, generally what people say, they enter into the private equity ventures. Then the space comes in of the crowdfunding stage. So the crowdfunding comes in. When the crowdfunding comes in, that means that people who have ideas can actually approach the crowdfunding platform and generate funds for that idea. So that is another building block for that ecosystem. Then comes the growth enterprise market. So the company generally is in a better position now. It has utilized its sources, it has approached the banks, it has actually approach the crowdfunding, that all is enabled right now. Then comes the growth enterprise market. These all are building blocks for capital formation. The growth enterprise market is a little sophisticated when we talk in terms of a crowdfunding platform. Then comes the main board. So growth enterprise, you are right, it will be, we would love if I see from the perspective of the PSX that there should be a lot of listings, we would like everything to come directly to the GEM, but we have to think of the whole ecosystem. So GEM is a building block within the whole ecosystem. The environment has been enabled right now. And Nadir has correctly mentioned both PSX, SECP are in continuous touch with a lot of people. If I have to count, we have conducted number of sessions with individuals, with Chamber of Commerces, with fintechs, different types of fintechs, with NICs, with certain startups, again with the aim to understand what are the hiccups that actually is holding the entity to come to the GEM board or to come to the main board or to enter into the crowdfunding space. This is again a block in this whole ecosystem.
So interesting. Athar sir, would you like to add something to that?
Yes, if you must be aware that for all the companies which are listed on the stock exchange, there is a very easy and transparent mechanisms already available in the form of especially convertible rupee accounts. So through the mechanism of SECRA, non-resident can easily, and this is a very commonly used by the non-residents to invest for portfolio investments and for making investments at stock exchange, and that's very well-established mechanism already available here. So any company listed on a stock exchange can easily be traded by the non-resident. Non-resident can buy, sell share, and repatriate their dividend and disinvestment proceeds and through their bankers. And this mechanism is already established and well tested, is already present there. So I don't think any issue if these companies are got listed at stock exchanges, and then it will be open to the non-residents for through operating through SECRA. So I don't think there will be any issue in that.
Okay. Mubariz, your perspective.
Yeah, I mean, I think Ms. Najia also pointed out the right fundraising cycle that any small business starting out, right, starts with friends and family, and then, I mean, personally, I don't think that startups have a crowdfunding form available to them just as yet, because it's a very high risk investment. Most of these investments fail, and I don't think the public is qualified enough to really be able to appreciate the risks involved in a particular startup and then invest in it. So for me, crowdfunding for very early stage startups is I would. So unless I really know the founders and have my report anyway, but I do think that stock exchange can play a very important role in terms of how investors would be exiting there, right? Currently, there's a focus, and I think there's some pointed out that there's a focus on dividends and how none of the IT companies have ever delivered a dividend. But to be very honest, if you look at, I mean, these are obviously high-end examples like Bezos and all, who in late 90s, early 2000s, really clearly established to their shareholders that if looking for a dividend, do not buy and stock. We will be reinvesting everything we make into the business, and it's primarily all about capital gains. But I think a lot of that capacity building and that knowledge needs to be imparted to the investors as well, who public stock exchange. We appreciate that there will be businesses that will not yield any short-term benefit or yield any short returns in this form of dividend, but this is something that the stock would appreciate in value over a period of time. And obviously, given that we are an economy that has been quite used to a bit of a rent-seeking mentality, and which leads to everyone expecting that casino economy, where you want exorbitant returns within months, within years, and if you can't, or if normal investments can't offer that, then I guess it's real estate or so I think a lot of that mindset needs to change. We need to be investing in assets that are actually are productive in nature, which will bring economic growth. Typically, Pakistani investors in property or just land, and I think a lot more needs to change if we are going to encourage more Pakistanis to invest in startups or early stage startups, which is essentially investment in people. And one of the bigger things that need to change with proper investment in people is the enforcement mechanism. And we need our court better, our distribution, which of course there's no representative for that in this particular roundtable. But the point being, it's not just the SBC, not the SECP only, not the PSX only. It has to be a wholesome systematic change where we can communicate a more safe more safe investment.
Okay, so welcome back, Khurram. Sorry to have missed you in the middle. So I had asked a question, sort of a summing it up question that, Nadir talked about GEM, which used to be the SME index before, and that's a part that that has really not taken off in Pakistan, right? So when a free idea I floated that if we convert GEM into a complete life cycle management platform for investors, and let's say, so any startup raising fund goes through GEM as a custodian, it allows us to get money from investors. I mean, same model coming up, but in a way gets regulated. So there's some level of protection for outside investors. There's a bit more visibility. There's a bit more discipline in reporting. So it was an idea that how different regulators and players in the ecosystem will look as GEM playing that kind of complete lifestyle fundraising platform till you graduate to the big board, right? So would love to have your take on that.
Yeah, I think it's a good idea, but look, honestly speaking, Najia had mentioned some stats earlier on. Right now, if you look at our, the big board, what we're calling big boards, in all of Pakistan, we've got about 500-600 companies listed on the big board. Najia mentioned about 250,000 registered UINs, investors, but believe me, if you look at how many of those $250,000 actively invest and how many of them are now dormant or created account once or create an account to get an IPO share into the account, I believe that number would be in tens of thousands, not even hundreds of thousands, right? So we have a long way to go just to sort of get the public to invest in large companies, let alone small companies. I honestly personally think that smaller board or the GEM board should be for accredited investors, high net worth individuals who understand the risk who understand that they're making an investment that will, possibly that they can, completely lose that money. People who understand how to diversify investments. People who know that if they're investing in startups, it doesn't make sense to invest in just one startup or two startups or three startups. They have to invest in 10 startups or whatever portfolio of startups. Maybe GEM should think of not just launching one startup on the board. They should think of creating a portfolio of startups, good 5, 10, 15 startups across the country, and maybe launching that as an ETF to begin with, just to give them, just to sort of, diversify have a diversified product to offer to the public markets. Also, it's not just having an investable company or a platform that allows investment in the company. You also have to train the investors, and more importantly, you have to train the underwriters. Right now, who are the underwriters that will be willing to underwrite an offering of a startup? You first have to educate them on what technology startups are all about, how to, understand the risks that are associated with investing in a startup before they can sponsor something for underwriting on the board. So I think it's as I've said in the beginning of the session, that all the regulators are moving in the right direction. They're not just inching in the right direction, they're taking big leaps in the right direction. And we all have to continue to work together in order to make sure that we get to this utopia of, for everyone, the investors, the startups, the regulators, and the public who are investing in these companies. So there's a bit of time before we get there, but we're all heading in the right direction.
Yes, thank you, Khurram. I would just sum up a great conversation today. I think what you said towards the end, Khurram, is spot on. I think we see a huge leap and a shift in the attitude and the way and the speed that our regulators are working. We see a very dynamic local investor culture coming up, an ecosystem of happening, different stages of investments, different styles of investments, different risk profiles, different segments. So we see great steps across the ecosystem. I think it's just a matter of time before everything comes together and we really, start running as an industry. So I would like to thank Athar Saab, Nadir Saab, Madam Najia, Mubariz, and Khurram for your valuable time and input today. I think it's been a great session, and I hope all our viewers and listeners also got something out of it. Thank you once again, ladies and gentlemen, and let's stay in touch. Take care.
Thank you. Bye-bye.